The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for kicking off your trading day right here with me. And we kick things off on a Jobs Friday. Markets in positive territory. And you got the unemployment rate edging down to 4.4%. The market, the economy, adds 50,000 jobs, pretty much in line for December, but we pick things up with higher prices across the board. S&Ps, you see the 830 volatility. We come into that number at about 69.75. We're trading at 69.84, up by 0.3% or 22 points. NASDAQ 100, you catch a bid as well. We were already slightly in the green, and right now we're up 110 points or 0.4%, 25,798. The Dow, record territory on Wednesday. You catch a bid yesterday as well. This morning, we're up by 0.2%, up 111 points, 49,604. And the Russell up by 0.4% as well, 2640 on the Russell. Yeah, that's an all-time high. Not so. All-time high on the Russell. Remarkable. Bitcoin, down by $400, 90,695 right now. Crude catches a bid yesterday. You talk about an acceleration, almost $3 to the upside from early yesterday to where we closed out. Right now, we're up by 61 pennies at 58.37. We jumped to yields on Jobs Friday. Excuse me. There's your volatility. You get the 10-year right now. We come into that 830 jobs number, and we're about a few ticks higher from where we were then. You see the volatility right out of the gate. The 10-year right now, 4.17. Okay, 4.17. You jump over the dollar, basically at 99 on the dot. We're at 98.99. You see the volatility again on that 830 number on the dollar. We jumped to metals this morning, 44.95. Gold up by $35 or 0.8%. Silver right now up by $3.37. The volatility on silver, man, remarkable. Okay, silver was trading this year to begin, well, I say this year, no, last year at about $29 to kick off the year. The April lows, you got as low as $27. You back things up only 24 months ago, and you're talking about silver trading. An entire ounce was $22. Folks, we're trading $10 every single day right now. Remarkable volatility towards the end of December. And then you just look at the pullback that we got from the high Tuesday evening to the low yesterday. Almost a $10 move, and since there, we're up by $6. Just extreme volatility in the silver market right now. Volume-wise, we got volume at these highs in silver. I talked about it yesterday on the program as well. You take a look at gold. Okay, this volume in that October runoff, you take a look at the weeklies in these metal charts. Look at that volume. That's quality volume to the upside, folks. It's almost a textbook definition of how you want to see a market trade to highs. You did have some selling. You pull back. Haven't had the same type of acceleration on this one, but you have strength in the 4,000 to 4,200 area in gold, period. Silver, it's even more pronounced on a weekly. You had that run up in October, and look at the volume since then. Since December 1st, the weekly volume, even during Christmas week and New Year's week. New Year's week in 4 days, you did 660,000 contracts. Now, that was selling on silver, though. And if you look at where this market was in October, where you had the purest example of volume to the upside, silver, from August, September, and October, you traded from a price tag of silver of about $36 up to $53, and you did that with volume all the way on the upside. It's been sustaining volume, but no acceleration as it's gone higher in the same regard. You jump over to platinum. There's your October volume. No, excuse me. There's your October volume on platinum. Not as pronounced as where you were in June, but we had a nice acceleration up to about 2,000 in platinum on December 15th, the week of. We jump over to copper as well. All these metals. Copper catches a bid to 611. Look at the volume this week in copper. Copper's a different story. That's the strongest thing we've had. Now, you'd like to see it close above these highs of 595. That's the high of July. We're trading right now at 589, right up against that level. All right, we jump to the data of the day. Payrolls December payrolls rise 50,000. The market was looking for a little bit of a higher number. The jobless rate, 4.4%. Yeah. You get into some of the numbers. And I had them selected, but they've been updated as I'm doing the program. We'll get into some of the numbers. But yeah, they're decent numbers. Yields this morning hanging tough. The consensus was about 70,000, but the unemployment rate, 4.4%. They were looking for 4.5%. The last 2 months were revised down by 76,000. Manufacturing jobs shrinking by 8,000. We continue to see an environment where companies are slow to hire and slow to fire. A little bit of hesitation across the board. Yeah, a bit softer, but unemployment rate, 4.4%. It's almost something for everybody. But for those that say the unemployment rate's at 4.4%, we're fine, the Fed's not going to cut, that might be the case even with Powell, but I don't see that being the case going through the majority of 2026. Just don't see it happening, man. All right, inflation's not persistent enough to be that large of a worry to not bring the overnight lending rate down from about 3.6%. It's just not there. Inflation's not at 3.75%. It causes huge problems when it's between 2.5 and even 3%, but it's not at 3.75% right now. It's just not happening. Now, we'll see if some of those tariff costs, okay, right now, you have importers paying a majority of those tariff costs without passing that burden on to customers on the end, but eventually the margins are going to matter again, and there's going to be a gradual shift that's going to be persistent if it's slow. Because businesses, they have margin goals. And over time, they're going to push the profitability to that goal. Now, let's talk about mortgage rates. So, here we go. $200 billion, Fannie and Freddie. So much for going private. You know, I talked about this when the idea of a 50-year mortgage came out. I said, the 50-year mortgage does not work unless the government's somehow going to subsidize it at the same time that supposedly they don't like the idea that they are government entities and that they should be privatized, right? Well, that's out the window, okay? Because now those two, Fannie and Freddie, are going to purchase $200 billion in mortgage bonds. All right, the Truth Social out here. The first word, of course, is Biden, but nonetheless, we kick things off with instructing my representatives to buy $200 billion in mortgage bonds. Yeah. And that those two entities have $200 billion in cash. So he's going to use that to put demand into the 10-year, which would mean higher price and lower yield. Now, surprisingly, there wasn't really a huge reaction on that news, but you jump to some of even the home builders, okay? Lennar yesterday, quite the acceleration. You get an acceleration as well. We're up from 109 to 113. Rocket, quite the acceleration to hear on that news last night as some of the others. Rocket's going to be up by $1.30, a 6% pop on the open. You accelerate up to $22. You take a look at this time. Look at this run. Rocket companies, my goodness. All right, folks. We got 15 minutes till the opening bell. We got S&Ps right now, up about 18 points, 20 points away from those all-time highs. We'll come back. We'll take a look at some equities. We'll come right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We have the S&P up by 12. And yeah, you take a look at this deal from Meta. They got quite an energy deal that they secure. And let's get this headline up here to kick it off. Multi-gigawatt nuclear deal for AI data centers. You kick it off on the Journal, how they put it. Sweeping nuclear power plan to fuel its AI ambitions. And yeah, a couple companies here. You're talking about Vistra, which is VST, Oklo, in there as well. And the agreement could end up totaling more than 6 gigawatts, enough to power a city of about 5 million homes. These numbers, just remarkable. You have Vistra up about 15 cents, Oklo up about 18. Oklo, of course, Sam Altman, small reactors. But Meta said today that it will purchase electricity from 3 existing Vistra core plants and support several small reactors from Oklo and Bill Gates-backed TerraPower LLC that they're planning to build over the next decade. Those deals follow a separate June agreement to get energy from Constellation Energy nuclear site. So there's Vistra. Now you've pulled back, this equity. Where do you pull back into? Some nice strength with buying at the beginning of last year. Quite the roller coaster this past year from April. Lows of $90 up to $220. You back down to $150. You're right back into this buying. The bar of January of 2025. Now you really got some strength down here at 100, which is the April lows, but you're catching a bid today. That's your monthly at 150, and there's your acceleration on that news, man. Up by 20% for Vistra. You jump over to Oklo. Up almost 20% as well. Now, realistically, all you are is back to the highs of December 1st on this equity. You talk about volatility, but we got some nice strength here in September. Look at all that volume. sustained volume to the upside as well. These equities have decent volume. It's not. You jump over to other uranium equities, catching a bit on that news. You got CCJ up by about $3 to $4 in the pre-market. You take a look at this equity. Look at that volume at the highs. You're coming right back into that area. We got a high out here of 110.16. Now that's your weekly. You're going to get some action today, but we're not going to do that. You take a look at the daily, and that was all that October 28th acceleration. Remarkable. News-driven. But we're right back up to that area. Highs 110.16. I think that's all-time highs. Yeah, all-time highs. So we're going to be challenging all-time highs on Kamiko this morning as well. Energy. 5 million homes. It's not always energy, but you think about the oil barons, right? Now it's going to be energy. It's not even controlling the technology. It's controlling the energy. These companies are going to control the energy that is needed to power. And you're talking about trillions of dollars. U.S. power usage expected to climb 30% in the next 4 years. And yeah, seems like these stories, some of these nuclear power plants, they take 10 years to build. Under the agreement with Vistra, Meta will buy energy from the Davis from 2 reactors in Ohio, and it's going to get an additional amount of energy that are planned to boost output from those 2 plants in Pennsylvania. Meta aims to see the first new reactors delivered as early as 4 to 6 years from now. A speedy target. With Oklo, the Meta funding would help kickstart the development of a nuclear campus in Ohio. They have a 206-acre development in Ohio. The company went public last year, but in 2024. With a SPAC headed by Sam Altman, of course. Vistra, for its part, said it would start planning for federal license extensions at those 2 plants in Ohio and in Pennsylvania. A 20-year agreement with Meta includes 2.1 gigawatts of operating capacity from reactors in Ohio and an additional 433 megawatts. So Meta would buy the nuclear power generation, but electricity from all of the reactors involved would continue to flow to the grid. That's the agreement with Vistra, and it's similar under what is known as a power purchase agreement. Energy to power server farms. About 5 million homes. Remarkable. Let's jump around to some of the biggest equities out there this morning. You got the NASDAQ 100 up about 33 points right now. Quite a slide for NVIDIA yesterday from 190 down to 184 almost. That's 150 billion in market cap on that decline just yesterday alone. Today we're slightly in the green. You jump over to Microsoft, down by $3 to $4.75. Amazon's been on quite a run. You're down by almost $2 to $2.44 this morning. Speaking of Meta, imagine you're pumping out deals like that, right? And your stock doesn't even move. Meta flat right now at 646. Google up to 328 so far this morning, and we'll check in on Tesla. Up a couple bucks. We take a look at the volume on Tesla. Quite a year coming up for Elon. And yeah, you got a volume at these highs, man. All you did on Tesla from this high is you pulled back on vapor thin volume. Christmas week, New Year's week, even this week. Look at the volume compared to what we had up here. Volume-wise, I like that pullback on light volume. You're coming back down to this area that you had some strength in, and you have volume at the highs on Tesla. Remarkably enough, Tesla up by $2 so far this morning. Quite a week for Ford going on. Quite the acceleration yesterday on volume. Look at it, man. You break above this area. That's what you like to see. So look at this. You trade higher in October, right? You come back up. You test it in the middle of December. You come back up and right up to that area in the beginning, and then boom, you accelerate over it with volume. On a weekly, we're right back to this bar right here. Well, that's how you want to do it. So look at this. What do we have? That's going back to July of 24. 565 million that week on the pullback. We're already above there. You had 309 million at those highs. And look, we're at 340 million. So you're going to have more volume than you had at the highs. You had some selling the week after, but that high, 1485. We're trading at 1440 for Ford. GM, quite the acceleration as well. All right. We're coming back for the opening bell, folks, and we're going to take a look at these home builders. Okay, look at this run that we had yesterday in the home builders, and you're catching the acceleration today. I think this might be the bounce, folks. Okay, you take a look at the weekly. We're right back to this consolidation on Lennar. I've talked about it before. And now we have the federal government putting a $200 billion bid into longer-term securities. We're talking home builders. We're coming back, folks.
Is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We open up after Jobs Friday, and you get the S&Ps up by 10 points right now. You can actually see below where we came into that jobs number. There's your 5-minute. There's your volatility at 8:30. You come into the opening bell, and we give up the gains from that 8:30 number. We're right now positive by 8 points. NASDAQ 100. We got some selling below that price level. NASDAQ 100 right now off by 21 points or 1/10%. Dow slightly in the green, up by 93 points or 2/10 in the Russell. Leading the way right now, Russell hits an all-time high of 2640, this morning. We're up 16 points or 0.6% at 26.34. The 10-year right now, a little bit of lower price, higher yield. You're negative by 3 ticks right now. You got the 10-year pushing 4.18. And your dollar above 99 at 99.09. Okay, let's take a look at these home builders. Lennar, you're up by 5%. Yeah. I'm going to take a look at these just for myself, folks. And I might be stepping into these today for a swing trade. Okay, even right now. We're up by 4.8% right now for Lennar. You jump over to D.R. Horton, up by 4.2% right now. You jump over to KB Homes, up by 2.8% right now. We go back to Lennar. This is how you like to move off a bottom, folks, okay? We've been talking about this, man. Your back's against the wall. You set your stop in there. Lennar, up by $5.30 today. There's your daily. Quite the extension yesterday. From 102 to 110, and on a weekly basis. Yeah, nothing like the volume we had on the way down. We'll see how the volume comes in today. It's going to be a big day today. We're running right now by 5.1% for Lennar. And this is basically quantitative easing, okay, from the Oval Office. This is the exact same thing. Whether the Fed's doing it and they're buying mortgage-backed securities, or the president's instructing Fannie Mae and Freddie Mac to load up their balance sheet by buying longer-term bonds, which increases the demand and therefore increases the price that they're going to have to pay for it. And by increasing the price, you're decreasing the yield on a fixed coupon instrument, right? There's been no real movement yet. This is not the only thing they can do. I've been saying one of the things that you want to watch most closely is that the Fed is going to be under pressure to cut. But the longer-term yields have not kept pace with the 2-year. Okay, at a time where we're passing the big, beautiful bill expected to add $4 trillion of debt over 10 years on a hope that somehow the growth, and this always plays out. It's always that we're going to grow everything enough to pay for it, and it never happens, right? So that's where the context of lower, but guess what? You better believe they have levers they can pull, and this is one of them. And so much for the privatization. We're just going to load up those government entities with mortgage-backed securities in a real estate market right now that many people would say, okay, go try and cash flow a real estate property right now. Go try and purchase that property, even if you put nothing down. But let's say you put 20% down. As an investor, too, you're going to be paying higher interest rates, okay? You go buy a single-family house for $500,000. You put down $100,000. You finance $400,000. You pay taxes and insurance. On top of that, okay, you're paying a mortgage rate as an investor that's probably pushing 8%. Even if you're in there with a home mortgage, you're paying 6.25%. Probably you can buy down that rate to 5.75, maybe 5.5. They can't cash flow right now, so the government is going to take over and buy all of those mortgages at a price that they can't cash flow. It's government stimulus of a mortgage market that you can't sell a property. Now, we need more houses built. So the home builders are going up today. That's a good thing if this is going to spur that. And yeah, you know, the Fed can do the same thing, man. They've done it before during the housing crisis, during the mortgage crisis. And I think this market's waking up to the fact today, especially, that they're going to pull every lever they can. Because it's remarkable that, again, for decades, the Republican position was that using government entities to prop up a mortgage market could have dire implications. And now, so much for that, as the $200 billion on the books is going to get used to buy mortgages for houses that are very hard to cash flow at the rate they're at. The numbers just don't work in many markets, no matter how they are. It doesn't mean the properties aren't worth what they're worth, though. That's the dichotomy going on right now. people still need places to live. You need houses. There's a premium when you have a shortage, right? That market, though, they call it like reverting to the mean, right? If you can't cash flow anything, then that presents a problem, which is why some of those biggest institutional investors like Blackstone, okay, they haven't been buying properties over the last couple of years because their business model doesn't work when they buy property and then securitize that and then take in the rent that's not able to meet the cap returns that are expected by investors. That's not what's happening right now. Yeah, that's what's happening for all the properties they bought in the financial crisis. Okay, it's not happening in the last year or two, but who's going to step in? The government's now going to step in. It's a remarkable shift, but guess what? You better believe that the government spending $200 billion, do you think that's where it's going to stop? I hope not, okay? Because, yeah, we need something to change because you can't 6.25% mortgages is a tough deal right now. Now, the most worrisome part about this, though, is that the market says, nah, we're not moving, okay? This bond market, I don't even know if $200 billion has the ability, right? $200 billion. When the Fed steps in, they step in with like $80 billion a month, right? $100 billion a month. $200 billion. Market will eat that up and spit it out overnight. But nonetheless, the home builders, man, yeah, look at this. It's not stopping. We're at highs right now. I take a close look at these. And here's one of the things I always say, right? You look at a chart like this and you say, oh, man, how am I going to step in when Lennar just was at 102? I'd be a fool to get in at 115. I could have gotten in 24 hours ago, 10% less. Try and get yourself out of that. Now, yes, do not chase stocks to the upside. This is the battle. This is where do you draw the line, right? What I'll say is it's a lot easier, okay, waiting for a stock to really show some strength and stepping in than it is trying to be the guy or girl that tries to buy this thing on the downside all the way from 134 to 102. I'd much rather wait and say, wait a second, there's a shift here. Investors are paying attention. Look at this 2-day rally. We'll see how the volume comes in today. All right, maybe that's what I'll wait for because it's not coming yet, man. This is a big day. Yesterday as well, but the volume doesn't compare. But guess what? These equities, I love the volume, what we did in November. You put this thing on a weekly, which is why I've been watching them so much. That was maybe the writing on the wall, okay? You have not had rapid selling in many of these home builders, Lennar especially. I've talked about it many times. We'll see if we can catch a bid. On a weekly basis, you got 15 million shares, but I like the strength in these things. And hey, you know, the levers are getting pulled by government, and I bet 200 billion is only the beginning. S&P's up by 20. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps up by 21 points. Markets green across the board right now. We check in on crude, trading at 59.12 as crude catches a bid. And I find myself more and more saying, you know what? This looks like a breakout to the upside, man. Okay? You've been chopping around on a daily basis on the top of its trend line, and we've caught a little bid yesterday and today on a weekly basis on crude. That's some nice acceleration to the upside. Most volume we've had in almost 2 months, and we might take that out. 1.38. Yeah, we're going to do it, man. We're at 1.3 million contracts on crude, so this is going to be the most volume since the acceleration October 20th. And boy, if you could ever get above 60.50, not sure that'll happen today, but crude, that's your weekly. Check out the 5-minute. We are crushing higher. 59.12 right now for the price of crude. Jump to metals. Gold up by $39 right now, right at 4,500 an ounce. Silver, just extreme volatility, up by another 5% on silver, up $3.60, pushing 78.75 for silver. Keep your eye on yields. On the heels of this jobs number, we got lower price, higher yield right now. The 10-year off 5 ticks right now. And you take a look at the odds of cuts coming down the line. Now, just yesterday, okay, this number was at about an 88% chance that we get no cut. Now you're at 95% chance. You go out to March, just yesterday, the odds we get no cut were 57%. Now they're 70%. Okay, the market's looking at this data saying the Fed does not need to cut when the unemployment rate just went from 4.5 to 4.4. You go out to the final meeting for Powell, April 29th, 55% chance you get no cut by that point in time. Powell's final meeting yesterday, that was only 46%. And let's go out to June, which would be the first meeting of the new Fed chair. And now the odds shift a little bit. Nonetheless, that's when you're expected to get your first cut now. Probably a likelihood. Next Fed chair gets 5 meetings, though. Keep that in mind. The market's pricing in 2 cuts right now. I made the case, my base case right now is that Powell doesn't cut, which is what the market's thinking. New Fed chair, June 17th, their first meeting. We get a cut that time. At a minimum, they would go 1 skip, 1 skip, 1. At a minimum. I can't imagine the political discourse come July 29th. You get a new Fed chair that comes in. Powell doesn't cut for 3 meetings. They cut by 25 basis points in June. Stephen Moran's talked about 1.5 points sometime this year, and then they skip. You go 1 cut and a skip after Powell. That's not what I expect to be happening. And that's the base case. And that's 3 cuts sometime over the next 12 months. That's 75 basis points of cuts. Now, will that translate to the 10-year? That's going to be the question. The 10-year right now is negative by 5 ticks. You jump over to the 2-year, you're negative as well. A little bit of higher yield on the 2-year right now, but we've talked about it, okay? You compare this to where we were in the March of 2023 highs, which was the lowest yield. That's when the market got ahead of itself, thought the Fed was going to cut, okay? Did not happen, but the 2-year was at a very low yield, anticipating the Fed was going to cut, and things swung around dramatically. Well, we're right back there. And this time it looks like, yeah, we've gotten the cuts that the market expected, and we're now at 3.5 to 3.75% overnight. Your 2-year, March of 23, was right where we are right now. Meanwhile, your 10-year, okay, we're not even close. At that point in time, I think the 10-year was at about 3.67%. The 10-year was at 3.67%. We're at 4.2 right now. Okay, so over the last 2 years or so, the 2-year is exactly where we were then, and the 10-year has gone up by 60 basis points. Yeah, that's going to be the battle when we go forward this year. As the Fed drops rates, how's the market going to interpret the longer-term duration risk for a 10-year yield at a time when deficits are expanding rapidly? Okay, $4 trillion over 10 years, folks. $4 trillion over 10 years. So do not expect the 10-year just to plummet when we get a 25 basis point cut by the Fed. There are things at play, but you better believe the levers of government, when you talk about supporting mortgage rates, yeah, that's going to matter. And just technically speaking, I love this area of 100. It's a nice round number. It's where you had support earlier in the year. It's where you found support in October of 2023. And you take a look, that's also the area that you kind of chopped around in 2021. It's a nice area of support for Lennar. You found a bid. We're well off the highs of 193. You're well off the highs of 144. Okay, there were a lot of people that got caught up in this acceleration. Nonetheless, I think we got a bid in these home builders. Jump over D.R. Horton. Same thing. Look at that great volume you had back there in July. And KB Homes as well. Not quite the same pronounced volume, though. I love that volume Lennar had in November. That's the biggest thing that's separating from me. That's your monthly. Put it back to a weekly. That was your nice sign of strength there. You dip below that level on vapor-thin volume. You continue the run on the holidays on vapor-thin volume. All right, let's jump around to the heat map. Yeah, Intel up by 6.5% right now. President Trump meeting with the CEO. Let's see, Google shares right now up by 1.2. Broadcom slightly in the green. Lam up 4.7%. AMAT up by 4.4. Yeah, the uranium stocks, of course. Constellation up by 4.2% as well, but a lot of red right now. I mean, look at all these big equities. NVIDIA, Microsoft, Apple, Amazon, Tesla, Cisco, Shopify. That's your NASDAQ. You jump over the S&P 100. A lot of red. Google, Intel, Broadcom. Some of the healthcare equities. You got Boeing higher. Lockheed Martin up by 3.5%. Morgan Stanley slightly in the green. We jump over to the Dow. Here's the Dow right near record territory. Boeing helping that index out, but we'll see on a jobs Friday. We've got the unemployment rate of 4.4%, but you do have yields rising a bit right now. You jump over to that 10-year. Down by 5 ticks. And we just hit 4.2% on the 10-year, just that quick. And that's helping the dollar, man. 10-year at 4.2. 99.14 on the dollar. And hey, with all that dollar strength, gold holding up well, up $34 with a strong dollar. You jump over to silver, up $4. Jump over to the metals, platinum right now, up by $35 or 1.6%. And copper participating as well, $5.90 for copper. All right, we jump over to the VIX as we come into this final break. 1565. The VIX actually elevated right now. So we get over the Jobs Friday number. The S&Ps are up by 14. But the VIX is elevated. Pay attention to that VIX, sometimes a leading indicator, but relatively very low volatility premium at a 1564 price tag for the VIX. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets in the green. Dollar catching a bid. 99.12 on the dollar as you got higher yield coming at you on a jobs number with the unemployment rate dropping to 4.4%. And we got the 10-year right now at about 4.2% right now. And, you know, these jobs numbers, okay, they're decent numbers. The jobless rate's at 4.4%. But when I look at this non-farm payroll number, okay, and you look at trends, the trend is negative, man. All right, 50,000 jobs. We have declines in there as well. You have potentially companies just a little bit slow to make those decisions for hiring right now. We talked about yesterday, productivity gains are through the roof. Productivity gains at almost 5% on a yearly basis. Why is that happening? Because companies are growing, but they're not hiring more employees. So that growth is being assigned as a higher output per an employee, right? You look at this chart, man, they got weakness. Okay, this market's pricing out cuts in this market, but you know, there is a new Fed chair that's going to be coming in May, and they are not under the impression that we are at a neutral rate, okay? And right now the rate is 3.5 to 3.75, and you can make a very reasonable case that we are not at the neutral rate. You have room, whether it's 25, 50, 75 basis points, you're approaching the area that some Fed officials are going to be less confident that they're still above the neutral rate, right? That's the point Powell often made. They're fairly confident they're restrictive. They're above the neutral rate. They have room to cut and still be restrictive. They're approaching an area that's going to get murky. You get down to 2.75 to 3%, we might have underlying inflation and growth at 2.75 to 3%. We're not pushing 3.75 to 4, which is where this overnight Fed rate currently is. So I think we're going to get some cuts eventually, even if they don't happen in the first 3 meetings. We got a little volatility today. NASDAQ 100 up by 13 points, Dow up by 55. How about the Russell? Record territory. We just hit 2646. Folks, stay tuned. You got Basil Chapman coming up live next for the Tiger Technicians Hour, folks. Steve Rhodes at 11. Fast Market from the Schwab Network at 12. Larry Pesavento live at 1 o'clock, and I'll see you at 3 o'clock, folks, to wrap up